Hi, this is Randy Finney with the right side of the chart, and this is a mid-session update for Thursday, July 15th, 2021. We're going to start out with the broad markets. Definitely want to point out what's going on there. Then follow up on some of the recently highlighted trade ideas. That will include AMC, Bitcoin, Ethereum, some of the commodities I've been looking at lately: wheat, corn, lumber, crude oil, and I also want to do highlight a new trade setup in natural gas. All right, so we'll go through. Let's just keep it in that order. Keep it simple if you want to jump ahead in the video. QQQ. We are now on that 60-minute trend line once again. This is the trend line I'm referring to. Comes off those recent lows back here from mid-May. Let me color up this tool and show you all these reactions. 1, 2, 3, 4, 5 right here last week, and now today. We're right on the line. That's a potential sell signal. Now, if we get that sell signal, whether how far we move down and how fast it is, or if the sell signal even sticks, I have to say that's a little bit up in the air, only because it's earnings season. And again, the big FANG stocks, Apple, Microsoft, Amazon, Facebook, Alphabet, they're all going to report in the next couple weeks here. So within the next 2 weeks or so, I think starting next week, if I remember correctly. And it's like taking a breakout or a breakdown before earnings always is a somewhat of a crapshoot, because that can change the charts. Now, I am a believer, and I've said this often: the charts, when a stock, or in this case the market, really, if you want to say, is heading into earnings, the direction that it's likely to take after earnings is often, if the charts are very clearly bullish or clearly bearish, that often will indicate which direction the stock will ultimately go after earnings. Now, when I say clearly, if it's not clearly bearish or clearly bullish, then it's a crapshoot. It's 50-50. If you're going to take a stock, long or short right before earnings, you might as well flip a coin. But again, if you have a clearly bearish chart, now this is a bearish chart pattern, as I mentioned, negative divergence building, nice clean trend line, divergent high, and so that's it. So you could take it on faith if we get a sell signal, and put a short on QQQ and manage it like any other trade. And that would be, if you take it, you get a breakdown, you set a stop that's going to be in line with your price target. If you're only looking for a quick pullback to this first target there, about 348.85, then you want a relatively tight stop. If you think you're going to get a lot more than that, maybe come on down here about that 316 level, you can allow for a higher stop. One thing you can also do during the earnings season is set stops based on a daily close instead of intraday, and that helps to minimize the whipsaw signals. When companies report, there's usually a knee-jerk reaction. They're going to report after the market closes or before the opening bell, and then you can gap up or down the next day. So that's just, I tend to be a little more liberal on my stops. I also tend to go light if I'm going to trade at all, keep positions relatively light into earnings. And then once earnings are out of the way, if I'm going to aggressively engage this market, via the indexes, QQQ, SPY, or the futures, it won't be until after the FANGs are out of the way. That's what I wanted to kind of say. So there it is. We're pending, a sell signal pending. I mean, we're slightly below it right now, but you can see nothing impulsive. That's not what you want to see on a breakdown. However, we are below that trend line. Let me look at NQ and see if that's the same story there. This is, of course, the 60-minute chart of QQQ. Look at NQ. I've got it here somewhere. Let me queue up that chart. There we go. Yep, also broken down. There we are, below the trend line. Let me zoom in just a bit. You can see right here, this candle is below. So there it is. I'm going to call it for what it is, a sell signal. And, I talk about volatility likely being relatively low. The market may be grinding around up until earnings, but that is, again, just a likely scenario. But I'm always on standby, even though I've cut back, on the frequency of the updates and everything, and trading a little on the light side because we're in the summer doldrums. I view myself a lot like the military, for example. Military base or a naval ship is always ready to go, even at peacetime. I think we pretty much learned our lesson in Pearl Harbor of being lax and not prepared on short notice. So the military's like that. It could be peacetime and everything's going well, but they're ready on a dime to man battle stations and and defend an attack at a base or a ship. And same way with the market. So my analogy is, don't fall asleep at the wheel. If all of a sudden we start popping sell signals everywhere, and it looks like there's some opportunities, then I will jump in and maybe change my positioning, or take a little bit heavier positioning. Again, depends on what happens. All I'm trying to say is expect the unexpected when trading or investing. All right, so that's that. There it is. We're right on the trend line, a little bit below it. I'm not going to call it a strong sell signal at all. It's a little questionable. But the farther we get below there, especially a solid 60-minute close below the uptrend line here on NQ, that would increase the odds of a sell signal. So right now, I'm just going to put it as a question mark, and maybe I'll do another video at the end of the day, wrap up here. And there's my targets. I've already gone over these targets before. All right, let's move on. Could look at SPY, but it's the same thing. Divergent high, and we don't have as good of levels. I'm going to add one level right here, just in case you trade ES. These are the S&P 500 futures. Roughly, it's not a hard line, but roughly at about 43.45, I see some support. I saw it as resistance right here, here. Popped it a little bit there, but then got rejected, and then back tested it here, almost right there. And lately, these last 60-minute candles, here, I'll zoom in for you, they've been bouncing on that level. Look how many candles we have on there. So 43.45 is support. And so therefore, if you're going to short the markets today or tomorrow or anytime, soon, you want to see that level get taken out as well. And that's even if you trade NQ, because see, this is why I like to watch both large cap ETFs or futures. Sometimes one will break down, like NQ just started to move below that trend line I showed you, started out, but yet here is ES bouncing along support. And so sometimes if ES holds this support and rallies up, that will most likely result in a false breakdown on NQ. But again, like I said, it's a marginal breakdown at this point. Maybe by the end of the day that'll change, and if so, I'll do another update. All right, let's move on to areas that we can and are making money lately. It's not really in the broad market. That's just kind of grinding around. AMC, beautiful chart. I just jumped over and overlaid this one. This is one I posted back on July 2nd, and that gave the sell signal. AMC broke down below the triangle pattern yesterday. That's right here, which was sell signal number 1 right there. There was our triangle pattern. And then sell signal number 2 came here on the break below 51.22. And so I have reactions here. Remember, this is a daily chart. The one I've shared yesterday, and I often cover in the videos. I've been highlighting 60-minute and even 15-minute charts. But I had a reaction here. And on the 15-minute chart, there was about 33 and change, followed by a break, move down to the trend line. And so each arrow break represents a reaction. A reaction is typically a bounce or a consolidation on that level. And then once you get the break of that level. And so I still have AMC coming down here on this daily chart. You can see the targets 20. I'm really favoring this 14.50-ish level, and then ultimately this $9 level. Again, that was July 2nd when the sell signal was given. This is what's happened now. So here it is on a 60-minute chart. Here's that same triangle. So there was your sell signal. From here, since the triangle broke, AMC has dropped into yesterday's lows about 40%. And off the highs, the stock's been chopped in half. So obviously the apes, as they call them, are feeling the pain, especially those that bought up here. And that's what the volume price histogram tells me, is that the majority of traders bought right here. A lot of traders bought right here, and all those traders are now underwater. That's the volume at each price. So there was a tremendous amount of buying going on there and there. Very little in here, and as I said to you the other day, once we took out that 41.72 level, that was a target, we hit and bounced there. It should be a quick ride down, and that's what it was. Remember, I equate these thin zones on the volume at price histogram to like a gap. A gap, you have no trades at all, because a stock will jump up from one area to another, or jump down from one price to another at the open. But when you thin zone, it just means that very few trades, very few people bought at that level, and that's why it was a quick run down. And so if you shorted that break of 41.72 just to swing down to the next target, that you made 21% in a day or two. So that's a nice trade there. And then, as I said yesterday, 33.13 is support. It's pretty good support. You can see a big old volume price histogram bar here. and that's right at the top of it. And so there's the reaction. So reaction's likely off that level. And so far, it's been about a 15-16% bounce in AMC, but I think it'll be fleeting. Now, I did draw this trend line yesterday in the chart I gave you. It's a downtrend line that could pop us up. If we pop it, and I don't know, equal odds, I'd say. We can go all the way up here. That would certainly be an objective short if we do 41.72. But I do favor another leg down, whether we get that or not. So, I'm just sitting tight, ride out any bounce. For me to be concerned at this point, they'd have to take it back above 52. That's a big level right there. And so I'm still favoring another leg down. We'll probably have a reaction if and when we hit this uptrend line. So let me zoom in for you a little tighter and show you what I'm talking about. Whether we get rejected here on the downtrend line or we pop up, this uptrend line here off these lows is likely support level, but then it's very thin in here, big old thin zone really right there, and I think it'll be a relatively swift move down to 14.58. So from where we're at today, 35.62 as I do the video, that's my next target. Like I said, maybe a little reaction on the trend line, maybe not, but that's a 60% drop from where we're at, and I have a pretty high degree of confidence we'll get there, whether it's a matter of days or weeks. I think AMC will end up at least down to that level, and then if and when we get there, I'll decide if worth holding out for any more, maybe all the way down here to that $9 level. And I wanted to update the cryptos. Been over the years, bullish and bearish, trading Bitcoin and the Bitcoin proxies, both long and short. Most recently, have been bearish and short. And this has been a pretty big level on Bitcoin futures to me, 31,465 BRR Bitcoin futures, and so you can see it's support. We had one little momentum fueled overshoot or a little pop below there and then rallied back up to close right back above it. Either way, we have a lot of reactions there to validate that level, and it's also this recent trading range here. So Bitcoin's sitting on support, and I think that support's probably going to go, and we're probably going to take another leg down. If you're a Bitcoin bull, you can certainly buy here at support with a stop somewhat below and try to, if so, your natural target would be the top of that trading range, 35,773. If it can break that, 45.13, but this is what I favor more downside here. Where do we go? Well, this is GBTC, the Bitcoin Trust. Most people probably use this instead of futures if you're trading it. We had a sell signal was given right here the day after it topped. We hit my first target zone, second target zone, and third target, first target zone, second target, hard line, third target. Then I, looking for a bounce, hit my first target on the way up right here on this bounce. Made it about halfway to the second target, and we've stalled out. And there's a downtrend line you can add right there as well. This always was, and still is a potential target. The risk reward for shorting here is not as nearly as good as it was here or anywhere along the way. The closer you get down to that target, the more oversold you are. And here's one more thing to take a look at here. Let me turn off all the lines and show you something that stands out. The divergences that are building on the indicators. So you have unconfirmed divergence. Now I call it unconfirmed because the PPO and the RSI, they're still pointing lower. They're momentum indicators. And so what I can see here, if we go a little bit lower, we're going to have positive divergence, especially if we turn back up. So that's what I'm looking at here. And that could be this catalyst for a more lasting rally. So again, consider that a potential long setup. Like I said, I'm looking for more downside. That T3 level is hit again. It was about 24.13. It could open the door down to 17, but we could also get a little whipsaw down through there and then a reversal, and again confirm that positive divergence. So if that's confusing analysis, again, my takeaway is, would I short it here? No, I already milked a lot of the meat off that bone. Maybe there's more downside on it, but it's just not worth it. I like to get in early, capture the middle part or the bulk of it, and again, that's why that was my final target, T3. That's just a potential target. So if you're bearish, and look, you can always trail stops down. Just remember that GBTC is an ETF-like instrument, so it's only going to trade at 9:30 a.m. to 4 p.m. This is, I believe, it's an over-the-counter vehicle, so it's not even, you're not going to trade it in pre-market. You're going to have to wait, and therefore it's subject to gaps up and gaps down. So that's it. We just give you ETCG, Ethereum, and there it is. That one's also been moving lower. Had a little counter trend rally, took out the downtrend line, rallied up, hit that 40, laid out these potential targets back here when this target was hit. My 2244 at the very same day, the same time, Bitcoin hit my final, that T3 target. That's where I posted this is a long trade, went long Ethereum and Bitcoin, and gave you these targets. Personally, I took profits earlier on the bounce. Didn't milk this one all the way up here, but it did reverse right on cue. Again, these levels were laid out in advance, 41, 13 or so. Hit it 1, 2, 3, 4, 5 days, couldn't get through it, moved back down. And again, you don't have divergence yet, but you have potential divergence forming right here. So I think we're going to take another jog down here, or continue lower. We've already reversed after hitting that. And we could hit my 2244 support or target again, but I think probably come down through here and hit that trend line right there on ETCG. And that also comes in around the 1733.77 support. So if you are short or going to short it, just trail your stop down and let it run. And if you're a bull, like I said, I can't make a case to step in here yet. If we get that divergent low, positive divergence in place on both Ethereum and Bitcoin, then I might be looking at these in the coming days to weeks as long trade setups. All right, next up would be, let's talk about wheat and corn. WEAT is the ETN. Right off that trend line the other day, right here, mentioned as objective long, and nothing but green sticks. Well, one little red stick in between, but a nice pop so far. And keep in mind, this is wheat. This is not Bitcoin. This is not AMC. So it's not going to move 20% in a day like those two. Therefore, you can take a larger position size because you're trading wheat. Again, so it's only an 8% move, but still you can take a larger position, make it worth your while. And also the case is made that this may be the beginning of the next leg up because we're in a bull trend, bull market in wheat. And when you're in a bull market and you get a pullback to a primary trend line and with some divergence to boot right there on the RSI, that's when you want to be long, not short. Corn, and I'll get to the futures in a second. Corn, same thing, bounce off the primary trend line. That's been a good for about 8%, also 8.3% bounce so far. Big level, we have these lines up here. You can draw a downtrend line, or you could say take out that previous high. And so there's a little triangle that should pop corn and be longer term bullish. But as of now, as long as it holds above this trend line, great. If it breaks the trend line, as I mentioned, we could come down here and have a deeper correction. But in doing so, we'd still be in a bull trend. You still are above these previous reaction lows. We just have to, either draw another trend line, or just sometimes it's not always about trend lines. They don't hold forever. As long as price support levels hold, then the case is still made. I believe that commodities are in an early stage bull market action. And that's why I'm more keen to buy pullbacks to support than I am to short. Let's see. All right, futures. I told you we'd look at that. Since we're on corn, there's ZC, corn futures. That's it. Wash, rinse, repeat. Divergent high, correction, divergent low, rally, divergent high, correction, divergent low, rally, divergent high right there, at least on the PPO correction. And most recently a divergent low there and a rally so far. On the futures, that rally has been measured, see, a lot better, about 13% so far. So nice trade on corn. And then wheat, CW, same thing. You can see all the divergent highs and lows. And since that divergent low, wheat futures have rallied about 10.5% and coming up right now to that former T1 target. Remember, it was a trade back here too off this divergent low and the breakout of the trend line, and we hit the T1 right here. I'm sorry. This is the line I gave you the other day as another potential target. T1 still may come into play. And what else am I watching? That's about it. So still So, oh yeah, here's what we can do. Draw a little trend line there if you're wondering where to stop out if it turns around again. But I think this is quite bullish because what happened is this was a very bullish setup to me. And the fact that it failed, we came and back tested the trend line, there was a gap down. This almost reeks of, and I've seen it before, whether it is or isn't manipulation. There's a lot of big players out there, institutions with billions of dollars of capital. This seems like, because that was a clean breakout and a clean back test, I think this was just a stop clearing move. And when that happens, that's quite bullish because you shake out a lot of traders, then you put another divergent low, and we've been rallying impulsively since. And so, if so, consider it kind of like a false, we call it a bear trap. And in that bear trap, then you get people that short wheat on the drop, and now they're being squeezed out. And so, anyways, I just want to say at this point in time for a swing trade, I still maintain or favor T2 17,674. We'll call it 717 or so. All right, so that's wheat and corn, and the other one, lumber. Still waiting. We're at the pushing the limits of that support. Remember, this is a 30-minute chart, but on the daily chart, we're at or just below some pretty key support, and we still have the divergences. I talked about it back here. We broke out, we hit the first target, and we had bullish divergence at this low. And before it even happens, look, if we take another leg down, we're still going to have, at least anytime soon, positive divergence, which we still have. So this is now our divergence. We need to see a reversal, and there's we'll call it a half-assed trend line. It's not my favorite. It's not super well defined, but you can see it here. There's a trend line that needs to be taken out roughly, and want to see some impulsive buying. For here, it was pretty impulsive, right up to T1. And the lumber's still under pressure, and that brings me up to the next one. We'll look at crude. Crude, I believe, is next. Lumber's dropped over 60% off the highs in just over 2 months, and I think sooner than later, we're going to see that in crude oil. Again, this is just a 60-minute chart here, but I made the case on the daily chart where we ran into major resistance, negative divergences there, and so far on the 60-minute chart, we've been stair-stepping lower. T1 hit, T2, little counter trend rally, negative divergence, moving lower. Need to take out this level. Need to take out 70.48 or so. And I think it'll happen, but unless it does, that would be your next objective. Well, it would be a sell signal. When I say next objective short entry, well, it was objective short right here on the bounce back to 75. That was resistance. And so that was an objective short, as would be a break of 70.48 to swing down here to the next target at 66.61. Finally, one more to show you is natural gas. Natural gas. Okay, there's a long-term chart of natural gas futures. And all the way back here, you can see simple stuff too. You look at the bigger picture on the daily chart. I like to look for these divergent lows or what was this one for, this arrow? I'm trying to recall. Either way, let me just circle the divergent lows, positive divergence, positive divergence. That's where your rallies come from. And this one I highlighted back here last year, around this time a year ago. That was our first divergent low. We had positive divergence on both the RSI and the PPO, and that was a catalyst. And I laid out these targets, these lines. I've not touched them in a long time. And we're at that target right now, 355. You can see we went up. We slightly overshot my first target of 250 right there, and then had a big pullback. That's a momentum fueled. It was an explosive move, and that's what I call momentum fueled overshoot. Strong momentum or velocity into that first target. So you overshoot a little, big correction. You were able to sidestep if you book profits there. Then we went on, hit my second target to the button, pulled back to the first target. So you were able to book profits, sidestep it. It was support. That's what happens. Resistance, once broken, becomes support. So that 250 area acted as support. Then we took out the previous high. Remember, the initial tag of a level often produces a reaction. Just the initial one. Finally, we came up again, fell shy of it, and then reversed. But finally took it out most recently here and ran up to my next target. Again, 355. And that's where we're at now. So we have negative divergence down here on the PPO. Almost divergence. We have a slightly higher high on the RSI. It's almost divergence there, and we're also overbought. So keep that in mind. Like, we were overbought right here, we were overbought right here, and we were overbought here with divergence. and we got a big correction. So I just probably laid out 5 reasons to short natural gas here, get ready to short. But what I want to see with the sell signal be, I zoom down then, daily charts kind of helps formulate the bigger picture. And I zoom down to the 60-minute chart, which I'm going to do right here, and that tells me, and I highlighted this recently, this level right here, about 360. We had a little whipsaw down through there, a little false breakdown, but we have a lot of reactions along that level right here, lots of them so far, and I think that'll do the trick. So there's your trade setup in natural gas. By the way, we put in a divergent high here, and we've just been moving around in this range. So look, they can bust out the top of the range with conviction. That's going to be bullish. They might take out the divergences. Although anytime soon, if they did rally it up, we're still going to have divergences. It's going to look like this. The divergence line is going to grow a little bigger if it's a marginal new high. So what I'm trying to say is it's a breakout I wouldn't be taking. I'd rather sit back and wait to see if it fails. If the breakout pops and fails, then I might short nat gas on the failure or the breakout if it falls back below this level. But I'm waiting right now to, on a break below 360 or so, and my targets are 330, 339.50, 3282. Of course, these are unadjusted targets, actual support levels. You want to cover a little bit above that, and we might have a trend line here that forms. We'll see. I don't have a lot of reactions on it so far. Maybe a trend line over here. But let's just say right now this is my these are my 2 targets again, 339.50 and 3282. All right, so that's it. Updates on some of the recently highlighted trade ideas, as well as a new one here for you in natural gas. This has been Randy Finney with Right Side of the Chart. Have a great day.